Hope you are doing good, guys. In this one, we're going to be taking a look at some fundamentals and be formulating a market preview for the coming couple of weeks. Hope you enjoy it. Stay tuned. So starting us off, we're going to be looking at the economic overview regarding currencies and indices. So payroll and Fed comments in focus for this coming week. The focus this week will be on Friday's release of key non-farm payroll data for June. So every month, the first Friday of every month, we get this data set, which is one of the most important data sets for the US economy. It dictates whether the industry and whether the economy as a whole is expanding or contracting, and also will assist the Fed in deciding if the rate cuts should potentially be happening or not. So the PCE price index, a key inflation gauge for the Fed, showed later last week that inflation was slowing very gradually, meaning there still remains a great deal of uncertainty over when the US central bank will start cutting interest rates. Ahead of the non-farm payroll data, a report on Tuesday is expected to show that job openings declined again in May. So this will lead to an overstressed economy and the Central Reserve Bank stepping in to maintain face in order for the economy to facilitate such data. So going straight into the economic calendar, we see that in fact today we've got some bad news regarding the manufacturing price index, actually worse than expected, with our ISM manufacturing PMI for June contracting. This could potentially mean that we'll see some contraction within certain industries for the next couple of months. We would like to get this number above 50, as that indicates that there is growth within the manufacturing index. Regarding other news, we see a CPI year on year for June coming in tomorrow for the euro, and then back to the States where we see non-farm payroll, non-farm employment change, initial jobless claims, and non-manufacturing prices for Wednesday and Friday, with the Independence Day on Thursday. So this is quite a hectic week actually in regards to data, and it's a key week because we as retail investors, we need to position ourselves with the data sets that were provided and formulate plans and a train of thought that potentially could assist us in determining whether or not some positions for us will be risk on or risk off. So with the States being done, let's move back to the local one, the South African economy, and let's start off with the Rand. So with a new coalition being formed with multiple parties, a lot of interest is piling up within the South African economy, with a lot of economists actually believing that we will be in a business-friendly environment, which can only mean good things for the South African economy and South African business as a whole. So with the new coalition and the new formation potentially providing positive news, they are still in the infancy phase. So you can see that the market is currently pricing in some hesitation towards overall direction and overall optimism. Which makes sense because at the end of the day we do have a coalition that looks like a net positive, but we don't have the whole picture as of yet. We still need to see what the policymakers' agenda is regarding certain policies, and if it is even going to be a net positive for the South African economy as a whole. In my personal opinion, I do believe that it will be a net positive and we will see some good growth within our JSE, with a lot of companies benefiting not only on a breath of fresh air within the economy, but a change of scenery that could potentially lead to new and better opportunities. So let's head on over to our charts and we take a look at some of the key movers that could potentially be happening in the coming weeks. Okay, so with a cup of coffee at hand, let's go through some of the charts. So let's start off with the S&P 500. Off the bat, I think the S&P 500 definitely overextended. We have a gap that has not been filled that was created around the 12th of June. I think with the market movers this week, this could be the sign and could potentially be the driving factor getting the S&P 500 down to around its previous level at about 5,400. I think we could see some consolidation heading towards this ascending trend line that we have over here. This is a daily ascending trend line. So if we start off with our daily, we see that the market definitely is in need of a correction to either this ascending trend line or that one before we head on up. Next, the FTSE. As you can see, we have been getting some bearish price action this last month or two. Although we are in a ascending trend line, we could potentially be seeing some consolidation and a possible break of this ascending trend line. This 8,100 to about 8,200 region, a very, very important region in my personal opinion. I think a lot of underlying skepticism is leading to both the S&P and the FTSE hovering at around a consolidation zone, and you see it much more clearly with the FTSE 100. I think if we break this level of 8.1 to 8.2, we'll see the price head on down to about the 7,800 region. The UK economy in general, not as robust as the US economy, and like the saying goes, if the US sneezes, every other economy gets a cold. So a potential downwards trajectory for the US economy on a short-term basis could be the volume and the intensity the FTSE 100 needs to head on down to the downside. Starting us off with our first commodity, which will be gold. Now, as mentioned in the beginning of this video, the key market data coming out this week and for the next couple of weeks. Regarding the news we mentioned earlier, this could potentially be a setup for gold to capitalize on some upward movement. We have a daily ascending trend line in place. We see some consolidation, and a very important region will be the 22 to 231. I don't want to see a clear break with intensity below this. If we do, we will need to get a clear sign of buyers coming in at around the 22 level before we will be before eventually making our way to the ascending trend line. I think with skepticism surrounding where the economy could potentially be going for the US and in general the global economy with risk on or risk off, we'll see the gold potentially moving sideways for a bit before moving on up to around the 2,400 level. On a shorter term basis, on our 4-hour time frame, we do see some signs of bullish price action, with this low over here being impulsively broken and potentially seeing some signs of a new high. We do have lower highs on the daily, and if we jot our trend line, we could potentially be seeing a break of this trend line before on heading up. So overall, this picture makes sense to an extent, but we will need to see some further bullish price action before we can actually validate a possible bullish direction. So next we have silver, as you can see, sort of forming the same type of pattern that gold is forming, but with this one, a crucial level for me will be this 29.50 to about 29.75. We need to see a clear impulsive break above this before actually validating this potential low and validating a possible move to around the 33.5 level. With the Asian session bringing in some much needed good data, we can see that the crude prices for today currently up around 2.3%, which is nice considering overall economic movement. And as previously mentioned, we did see a contracting PMI and a PMI that was below expectation. This also a driving factor in our crude oil prices. Although we have a positive Asian number, we do have a lot of skepticism and pessimism surrounding this coming week and 2 weeks, and the US data this week could be the catalyst needed for crude to head on down to about the $76 region. Regarding the dollar index, lately we've seen some bullish price action, but same like crude, I believe it could potentially be short-lived. We are currently in a zone where I believe a lot of sellers are just waiting to short the dollar, as well as some key economic factors driving the dollar's price down this week. We could see this being the zone to short the dollar against the various other economies, with a possible target being the 104 region. And just for an example, I'm going to be showing a trade that I am potentially interested in if we get the correct price action. So heading on to our 4-hour time frame, we see we have a nice clear break of the previous high with a gap. The gap is currently being filled and we have a reversal pattern in place. So we do see nice signs of rejection, and I think this could potentially be a good area to get involved in Euro USD for a upside gain to about the 1.85 level and then eventually the 1.9 level. So with overall market sentiment looking negative and bearish, there are little crumbs of positivity coming in, and I think this week is definitely a week to be wary of price action, be wary of volatility. We don't want to get stopped out of trades where our fundamental analysis and basis are correct, but we didn't have the correct margin of safety. So guys, that's that for the charts. That's that for this video. I really hope you enjoyed this video. If you feel that we deserve a like and a sub, please do so. I'll really appreciate that. Then I'll see you on the next one, which will most probably be a portfolio update for June. So stay tuned and I'll see you then.